All right, so welcome to this episode of Real Estate Chat with Robert Heed
Janda Perez.
and so Robert, you were so very close in terms of your forecast, and I want to just say that first because for those of you who watched our previous episode of Real Estate Chat, you saw Robert forecast on February 22nd, mind you, the sales figures to be just shy of what 4,600-ish around that range. The price range that he figured on two different charts. One was at 1,059,000. Second was at 1,1. And so let's load up the market watch because this episode will be a market update. But before we get to that, Robert, you said something very interesting about what this market is all about. What was that?
Well, this market is like every other spring where you're living in a house and you know there's bulbs in the ground that were planted by somebody else. So you know they're going to sprout, but you don't know whether they're going to have long stems or be bushy, have small flowers or big flowers, but you know they're coming.
They're coming and they are here, and we're going to find out just how much of a bloom they are going to get. Let's jump to the market watch for the Toronto Regional Real Estate Board, February 2023. Watch a few episodes back. I believe it was number 25, where you will see Robert's forecast pretty darn close. And the last couple of days of February, Robert, kind of bloomed, as you said, because we're looking at 4783 reported sales for Feb 2023, down 47%, no surprise, from peak. The anniversarying out, we've referred to a couple of episodes of this. New listings at 8,367, down 40% from 14,153, which is a significant decline in new listings being introduced to the market. Robert's going to be talking about Cancel Realist later on. Active listings sitting at 9,643. And that's down that's up by 38% from 6,984 last year. So last year, remember, tight inventory. This year is up. But again, we're going to get comments on how that is relative to the health of the overall market. Average price sitting at 1,095,617. That's a drop of 17.9% from peak February 2022, the anniversary of peak prices. So you're looking at about an 18% drop from peak at this point. Month over month, you're seeing a rise in prices. Average listing day on market 22. It was at 9 last year. Average property day on market 33.11 last year. Just a couple of numbers, and then I'm going to get Robert get into his charts. When you're looking at the sales to new listings ratio, across all of the Toronto Regional Real Estate Board, we're sitting at 46.6%. Robert, how would you explain sales to new listings ratio and how it's relevant to understand this in the scope of the entire market?
Okay, sales to new listing ratio, they just came out with the relists about half an hour ago. So I haven't plugged that into my chart to tell you what it really was. However, sales to new listing is a function of the number of sales and the number of new listings. Now, we were comparing to a year ago, all these numbers of a market that was in full blast spring mode early in February. And there was threats of increasing interest rates, and there were people panicking to buy and panicking to sell. We have the opposite condition now. We have threats of higher interest rates. I guess it's not that much different. And we have people who don't know whether to get off the fence and do something or do nothing. And we don't have, well, we have everybody with an opinion, and most of them are going to be wrong. So to compare this year to last year is the not wrong thing, which I've said millions of times. Today, we'll look at the 10-year, the 5-year average for February and decide whether we're ahead or behind the February average, not the mania of last year.
Absolutely. And right now we're also sitting at 2.2 months of inventory. And Robert's going to go in as I load up his charts here. All right, Robert, let's have a look at your charts. And for everybody watching this, you can read Robert's blog to see the full version of it, www.unclebobexplains.com. So Robert, take it away.
Okay, this is a background chart that more or less was explained by Jonder in his introduction. I changed this one by inputting the most recently reported number of 1095 as the selling price average for last month just finished. And it's about the same as we were in March of 2021. The other calculations are on there. I'll have to update again for March. Now, March, here's an interesting, is flat. Most of the time, 16 out of 21 months, it's flat. It's up a bit, but it's flat on average. So this may be the peak again that we compare to next month. But so we don't need to look at this one anymore because it's part of the introduction of what we tried. Now, okay, here we are, sales, using this upsy downsy school year, fiscal year chart. So we see that we've just come through the lousiest time of the year, as always, December, January, and we're working our way back up to spring. Now, we are currently in the 22nd best February. We just finished the 22nd best February in Treb history. So it's lousy. But what we did is we moved up from being 40%, 45% off the 5 and 10 year average to being 36, 37%. I'm sorry, 32, 36% off the 10 year and 5 year average. So it's an improvement. It's an improvement. We go to the next one. It's the same information except in a conventional January to December format. And you can see our little red line is working its way up there, still way below average, way below everything. But this chart also in the top corner talks about, notes the number of sales over $2 million. So there was 323 sales in February, which is about almost 7%. 5 year February average for the month of February is over 5. And so far we've had not quite 500, and it's a little bit over 6%. So I'm going to say everything normal. The next chart we looked at shows that specifically. This has all been created to help our friend Mitch Corrin, the famous real estate lawyer, prove his point that there are no $5 million or hardly any $5 million houses being sold. And so that's why your price is going down, and don't worry about it. We learned from his comment that indeed 416 is having a much different time than 905, and it's all supply and demand. That, as John just said before, listing inventory is way down. There's lots in 905. Many more in 905, but 416. But we report it all together as one, and we see that there's been an increase in $2 million plus listings in the last month. Quite a dramatic one. Okay, so now we go to prices again, and we're not as high as we were last year. We're off by 18%, as John has said. And we're sort of following the trend from the year before, and we'll see what happens next time, because as this bulb planted by somebody else, we don't know what's going to unfold. We don't know what the Federal Reserve is going to do in the United States. We don't know what our friends in Ottawa are going to do in response, or to lead them, or whatever. They're trying to out-Paul Volcker each other of who's going to hold interest rates higher for longer than the other. So if we go to the next chart, we'll see that same information on prices, having the 2-year look with, again, the September to August school year. So there's the same turn up, and the 2-year change is around 5%. It was higher before. It was like 12% up 2 years. So it's sort of tempered itself. But again, we're following the pattern, the path from 2 years ago, 2021. So it could be worse, is what we're saying. It could be worse. Now, inventory is what everybody wants to know about, because the total number of properties that are on the market on the last day of the month is how they get active inventory. So it's a shade less than 10,000. We're on the 10-year, we're 15% below average for February. And on the 5-year, we're 35%. So this is very significant, that there's not a lot of houses for sale. And if you look at the ones that are for sale, you see a lot of them are the same old thing that you saw last year in September, you saw last year in December, you saw when the year changed. And nobody wants that thing. But anything new comes on at a competitive price with offers holding for 5 days, gets snapped up immediately. So we've heard a lot about this, multiple offers and bidding wars and things like that, because it's on the new and good owner-occupied stuff. So inventory is light. Yes, you're right. Next one is our 2 measures for days on the market. Now, days on the market went down, as they should, because it's no longer Christmas holidays. It's no longer January 15th. We've gone by February the 15th. Where on February the 15th, we decide whether we're going to see this year's price prevail over last year's price or vice versa. And we're on the way to March the 15th. Unfortunately, that's going to be in the middle of the school break, which is going to tell us whether we have a buyer's market or a seller's market. The recent rally that we've seen is going to stimulate a lot of people to put their property on the market. You've seen it already in the last 10 days. Inventory has gone up. And as long as there's not too many, that's a good thing. Now you have more to pick from. So the relist chart came out a few hours ago, and we can see that according to their number, 16.65% of the new listings that they cite, which is somewhere around, I don't know, let me just say it is 8367 new listings, 16% according to their calculation, 19.9% according to my calculation are duplicates. So there was about 7,000 new listings come on the market in the month of February, which is, well, lousy. Normally there's far more, but it's better than last month, but that's what it's supposed to be. Is it going to be worse than next month? Yeah, because that's what it's supposed to be. So everything is what you would expect in the spring. Everybody's what you would expect when you're watching the growing, the bursting through the ground of bulbs that were planted by somebody else. This is my regionalization of the chart that just you saw a minute ago. So without saying too many things twice, it's a wonderful day in the neighborhood.
Is that how we're concluding this, Robert? But I still have a couple of questions for you, though.
Okay, well, good.
Right, and some of it we'll cover in a future episode because we have a lot of commentators about bidding wars. One of the questions we had from our previous episode, thank you so much for our viewers who are supporting us and subscribing on his channel and liking this content, is are there more buyers? Are there more sellers? When will we find out which way things are going to go? So a little bit of Robert's analysis and a little bit of the Toronto Regional Real Estate Board stats are kind of giving you indications of where this market may go. But Robert, between the tug of war between buyers and sellers, and of course, knowing that at the end of the day, in order for a transaction to be minted or to be posted, a buyer and a seller have to come together. Are there more buyers in this market? Are there more sellers in this market? And over the next couple of weeks, where will it go?
Okay. What we can't see yet is the sold conditionals, because the sold conditionals are only posted as under works in progress, not done. That there's a lot of sold conditionals. You look on the daily notice pages, there's a lot of sold conditionals. That's why also the end of the month, the end of Friday, the people always have their conditions run at the end of the month, run to the end of the week. So that's why we did so well towards the end of last month. But there are buyers like crazy sitting on the sidelines. There are sellers like crazy, if that's a term, sitting on the sidelines, waiting to find out, is this a good time to buy? Because I don't want to buy just as prices go down. And there's sellers that are saying, well, I could have got more for my house last year. And if they could get somewhere near that, or if they thought they were encouraged to think that they could, then they would put their property for sale, which would also bring the buyers out to look at those houses. Now, everything is all based on interest rates. And we're getting a lot of bad news, bad vibes. Everybody's got an opinion. This is going to happen. We're going to keep them higher. We're going to go to 7%. Probably will. Because everybody's trying to out-Volcker their friend or their countryman or their fellow governor of the board of the Bank of Canada. So we'll see. But we're going to have to be inventive with financing. I've said it a million times. You're sick of hearing it. To get over this 2-year hurdle where interest rates are higher than what you'd like, and we're going to use what used to be called creative financing, which just means putting your head to paper and pen to paper and sitting down with a buyer and saying, and a seller saying, what will you take in the price? What will you take for monthly payments? What will you pay for the price? What will you pay for the monthly payments? And cobbling together a deal instead of just standing back and saying, pay or go away. So I don't know if that answers your question, but that's my answer.
Well, I mean, the answer is there's solutions to this. And in previous episodes, as you can watch here on Real Estate Chat, the anniversarying out, knowing that it's the peak. And one of the most common comments right now happening on social media is the fact that, hey, real estate agents are saying that the media is, calling it a market crash, the sky's falling. We've used that in our previous episodes. Yes, we've definitely referred to those articles. Yet at the same time, yes, we are comparing what's happening right now to peak February 2022. We're also looking at what has transpired January, December, November, et cetera, et cetera. So the overall thing is we've got to put into context what's happening, right? For if you're dwelling on the fact that, yeah, the market's crashing because it's off of the February 2022 peak, well, you've got to look at the conditions that existed back then versus now. And then you've got to decide, as part of my home buying or home selling journey, what is my next move relative to this current market and how do I strategize, right? And so if you have any questions about your next move, feel free to post it into the comments, ask Robert, read his blog, have a look at our websites, and make sure you click subscribe, click on like. If you dislike this, click dislike and tell us why. Just put it into the comments. In future episodes, we're going to go through one of the most heated discussions, which is about multiple offers, a.k.a. bidding wars, where that whole practice started, how underpricing became, or quote unquote underpricing became a part of this strategy, whether it's good or bad for the consumers, for the industry. That's going to be an in-depth conversation we'll have in a future episode of Real Estate Chat. So stay tuned for that. Robert, any final words?
Big storm coming. Hurry up, get in the car, get home.
Amazing, right? Go out and have a look at some houses over the weekend if weather permits. Otherwise, the market is blooming.
Blooming is right.
Thank you for joining us on this episode of Real Estate Chat. We'll catch you in the next episode. Bye for now.
See you later.